There's a weapon more powerful than any army, and it's been used to conquer nations for centuries. That weapon is debt. Most people think empires are built with soldiers and steel, but the British Empire was built on something else. Promises, contracts, and interest payments that never end. Here's the contradiction. While ordinary people were taught that debt is shameful, the British elite learned the opposite. Debt isn't a burden, it's a business, the most profitable business ever created.
So how did a small island become the banker to the world?
Let's set the stage. Late 1600s. Britain is struggling, locked in expensive wars with France, Spain, and the Dutch. The treasury is empty. Wars cost money, a lot of money, but Britain had a problem other empires didn't. They couldn't just raise taxes endlessly. Parliament had made that clear after the English Civil War. So how do you fund a war when you can't squeeze your citizens dry? The answer came in 1694. The British government created the Bank of England. This wasn't just any bank. This was a machine designed to turn debt into power. The government would borrow money from the bank would issue notes backed by that debt, and those notes could be traded like property. Suddenly, Britain didn't need gold in a vault to fight wars. They could borrow against the future. They could sell bonds to investors, promising to pay them back with interest. And because Parliament could raise taxes to guarantee repayment, those bonds were seen as safe. This was the birth of modern government debt, and it changed everything. But here's where it gets interesting. Other countries had borrowed before. Spain borrowed from Italian bankers. France borrowed from its own nobility, but those systems were fragile. Kings defaulted. Trust collapsed. Britain did something different. They made debt permanent. Instead of borrowing for one war and paying it all back, Britain rolled the debt over. They borrowed to pay the interest on previous loans. The debt never had to be fully repaid, it just had to be serviced. This is the genius of it. As long as Britain could make its interest payments, investors would keep lending. The debt could grow indefinitely. By the early 1700s, Britain was borrowing more than any nation in history. But instead of collapsing, they thrived. The bond market gave them unlimited credit. France tried to copy the model. They failed. Why? French kings could still default on a whim. British debt, backed by Parliament and the rule of law, was trusted. Trust. That's the secret ingredient. Britain didn't just sell bonds, they sold confidence. So what did Britain do with all this borrowed money? They built an empire. The 7 Years' War, 1756 to 1763, is the perfect example. A global conflict. Britain fought France in Europe, North America, India, and the Caribbean. The first true world war, staggeringly expensive. France, despite being wealthier and more populous, couldn't keep up. Their finances collapsed. Britain borrowed its way to victory. They issued bonds, raised loans, and kept their armies in the field long after France ran out of money. When the war ended, Britain had won. They took Canada, they dominated India, they controlled the seas, all on credit. But here's the kicker. That debt didn't cripple Britain, it made them stronger. British bonds became the safest investment in the world. Dutch investors, German princes, even French bankers quietly bought British bonds. Britain had turned debt into a global product. Now the real innovation, the secondary market. In London, a new financial district was emerging, the City of London, and in the coffee houses and trading floors, something revolutionary was happening. British government bonds, called consols, could be bought and sold freely. You didn't have to hold them until maturity. You could trade them like stocks. This created liquidity. Suddenly, debt wasn't just a contract, it was a commodity, a financial instrument that could be priced, traded, and speculated on. Merchants, aristocrats, even ordinary citizens bought bonds. They became a way to store wealth and earn steady income. The British government had turned its citizens into creditors, and those creditors had a vested interest in the empire's survival. But here's what they don't tell you. While the wealthy collected interest, ordinary British citizens paid for it through taxes, through inflation, through wages that never kept pace with the cost of living. The system was designed to extract wealth from the many and funnel it to the few. Every interest payment was a transfer from workers to bondholders, from colonies to London, from the future to the present. Britain didn't just borrow from their own people, they trapped them in a cycle where they paid twice, once through their labour and again through their taxes. This is the dark side of the financial revolution. The bond market created wealth, yes, but it also created a permanent class divide. Those who owned bonds got richer, those who paid taxes got poorer, and the gap between them grew wider with every interest payment. But Britain didn't stop there, they exported the model. As the empire expanded, British banks followed. They financed railroads in India, mines in South Africa, ports in Hong Kong. Everywhere they went, they brought debt. Colonial governments borrowed from London to build infrastructure. Local elites borrowed to buy land. Merchants borrowed to finance trade. All of it flowed through the City of London. Britain wasn't just ruling an empire, they were financing it. And the interest payments flowed back to London, enriching British banks, British investors, and the British Treasury. This is how you build an empire without conquest. You lend money, you create dependency, and you collect interest forever. Think about India. By the 1850s, the British had lent massive sums to build railways across the subcontinent. But those railways weren't built for India's benefit. They were built to extract resources more efficiently, to move cotton, tea, and opium to British ports, to strengthen British control. And who paid for those railways? Indian taxpayers, through loans that India would spend decades repaying, with interest. By the 19th century, Britain was the world's creditor. They financed wars in Europe, development in Latin America, the expansion of the United States. The pound sterling became the global reserve currency. British bonds were the foundation of international finance. Debt had become Britain's most profitable export, and the cruelest. Because unlike goods that are consumed, debt regenerates. It compounds. It never truly goes away. Entire nations were locked into cycles of borrowing and repayment, and Britain sat at the centre, collecting interest from every corner of the globe. But empires built on debt are fragile. The First World War changed everything. Britain borrowed heavily to fight Germany, but this time they weren't borrowing from their own citizens. They were borrowing from the United States. By 1918, Britain had won the war, but they were broke. The debt was crushing, and for the first time in 2 centuries, British bonds were no longer the safest bet in the world. The United States had taken that crown. The interwar years were brutal. Britain struggled to repay its war debts. The pound weakened. The empire began to crack. When the Second World War broke out, Britain had no choice but to borrow even more, almost entirely from America. By 1945, Britain was victorious, but the cost was total financial dependence on the United States. The empire that had financed the world was now being financed by someone else. The Bretton Woods Agreement in 1944 formalized the shift. The US dollar, not the pound, became the world's reserve currency. The age of British financial dominance was over. Britain had built the system, but they couldn't maintain it. The debt that had fueled their rise became the weight that dragged them down. The creditor had become the debtor. So what's the lesson? Britain's rise wasn't just about military might. It was about financial innovation. They perfected the art of borrowing, turned debt into a tradable product, and used credit to build the largest empire in history. But they also proved something else. Empires built on debt are only as strong as the confidence that sustains them. When that confidence shifts, the empire follows. Today, we live in a world shaped by the system Britain created. Government bonds, central banks, global debt markets, these are all British inventions. The United States, the current financial superpower, is following the same playbook. Borrow to expand, roll over the debt, keep the interest payments flowing, and hope that confidence never breaks. And just like in Britain's empire, ordinary people pay the price through taxes, through inflation, through wages that can't keep up, while the creditors, the bondholders, the financial elite, they collect their interest payments like clockwork. The system hasn't changed, only the players have. History doesn't repeat, it rhymes. And if Britain's story teaches us anything, It's that financial empires don't last forever. They rise on credit, and they fall when the debt becomes too heavy to carry. The question isn't whether the system will collapse, it's when and who will be left holding the bill. If this gave you a new perspective, hit subscribe. History has the answers. I'll show you where to look.